Hey guys, Spiteri. Hope you're doing well today. Wanted to explain a home equity line of credit, sometimes referred to as a HELOC. Kind of pros and cons of it, some general guidelines. Pros of a line of credit is it's easy. It's usually a fairly easy loan to get. It's based on your current appraised value of your property. There's usually zero or close to zero in closing costs. You get to keep your current fixed rate mortgage that you probably paid a substantial amount to get, right? So that's a good thing. Some of the negatives, there's an annual fee usually attached to them, so make sure you check that and what that fee is. It's only available to you on the current value of your home. So if you're planning a construction project, it's not going to give you any credit for what it is you're adding to your home, whether you're adding square footage or remodels or that kind of thing. It's just based on your current value. The thing I probably like least in the line of credit or HELOC is the fact that it's an adjustable rate product. Adjustable rates aren't necessarily a bad thing. They're better in a low interest rate environment. They are in a higher interest rate environment. Most HELOCs are tied to what's called the prime rate, and prime rate is usually the first increase or decrease in the marketplace as rates go up and down. If you get a line of credit or a HELOC, just know that the potential of the interest rate changing is probably rather good. We're going to talk about loan to value and a combined loan to value. When you get a first mortgage, there's a loan to value attached to your house, right? You may have heard it, 70% loan to value, 80% loan to value, 90% loan to value, whatever the number is. Well, what we're doing is we're going to take your current loan to value and we're going to add the dollar amount that you qualify for or the program qualifies for to give you a combined loan to value of the two loans together. That's referred to as a CLTV in our industry. The higher the loan to value, usually the greater the interest rate. And then condos usually have a lower combined loan to value just because there's a little more risk associated with condos. The maximum loan amount on most lines of credit is about $500,000. Now, of course, you can't just get $500,000 on a $300,000 home. It depends on what the combined loan to value would be, but usually the maximum number they put on these things is about $500,000. Know that everything I'm giving you here is guidelines, and every lender has specific rules that they go by. Credit scores usually need to be between 680 and 750 in order to get the better programs. If you start getting into lower credit scores, you'll find that the loan to values usually go down, or the abilities to get one goes down and the interest rates will go up. The terms of a home equity line of credit are different than a traditional 30-year fixed rate mortgage or really any kind of other permanent mortgage to your home. Normally, home equity line of credit loans will go for 2 5-year draw periods. This means you can use the money, pay it back, use it, pay it back as many times as you want during the draw period. Those are adjustable rate mortgages and they go up and down with the marketplace, but it's your money to use for a period of 10 years. During that 10 years, you're paying interest-only payments. After that, you are now on the hook for a 20-year fully amortized mortgage. So you got to be careful when it starts, the 10 years of interest-only payments can kind of spoil you, right? And after that, your payment's going to go up pretty substantially. So let me give you an example. If you borrowed $50,000 on a line of credit, you have 10 years to pay back your today's rate at 3.25, because that's what prime is, plus your margin of 3.49, and that's the profit center for the lender. That margin will vary from lender to lender and your situation, whether it's high loan to value, low loan to value, combined loan to value, credit scores, that kind of stuff. Your first payment during the first 10 years is going to be $315, interest only. The next 20 years, it's going to go up to $372, and at that point, your loan would be paid off. Little brief example. So where do you get a home equity line of credit? You're going to get it from a mortgage banker, a mortgage broker, bank, a credit union. Thank you very much for your time. I look forward to helping you with any of your mortgage needs.